Hi, I'm Nathan from the Independence Money Show, where we teach people how to protect their assets and income from the theft of taxation, and we teach sound money principles. I'm recording today from my house because we're supposed to be off work. Amanda and I were spent this past weekend in Dallas at the Sovereign Man Conference. One of the keynote speakers there was a tax attorney, of which I just totally digested that content. And this episode is We Need Your Help. And here's what I'm talking about. They're attacking your ability to keep your money independent in this reconciliation bill that's tied in with this infrastructure bill. So let me give you some specifics. But first, let me ask you a question. If your money's not independent, then how independent are you? And one of the best ways of keeping your money independent is to use structures in the existing tax code like the self-directed IRA and Roth and the self-directed 401k and Roth. And the basic structure here is you're the managing member of an LLC in the context of the IRA and the Roth, that the LLC can then make direct placement investments such as cryptocurrencies, such as precious metals, and such as private placements in another small business that you're wanting to invest in, or real estate. And that's what's under fire right now. They think they're going after all these rich people, but newsflash, majority of my clients as a fiduciary investment advisor are Main Street Americans, and they just want an alternative to the stock market. Because if your money's in the stock market, you're not independent of the system, because they're controlling the money supply, they're controlling the prices of the market, and that puts you square in their control if that's where all your money is at. So the self-directed IRA and the Roth allows you to kind of get out of that system. It allows you into crypto. It allows you into real estate, especially if it's international real estate. You definitely have independence there, and precious metals. And that's one of the things we can teach you as well. I just got off the phone with one of my tax attorneys, Adam, and subscribe to this channel and ring the bell so you get updates, because we're going to feature him on an interview this Friday, the last Friday in October. And he's going to talk about some of these things. So some of the bullet points that he mentioned here is, in this proposed legislation, they're looking at eliminating what's called the backdoor Roth 401k. So what that means is you could contribute up to your personal contribution, let's call it $20,000, into the Roth side. That's where you pay the taxes up front, and then the money comes out tax-free after all these years of growing. And then the company matches that. Now, the match of the company, which is your own company, by the way, if you're self-employed, is traditional, meaning it's tax deferred. It's a tax deduction to your company, and you don't want to leave it in that tax code, because that means the money would be taxed when it comes back to you. So you convert it to a Roth almost the next day that it shows up there, and that allows you to get some $50,000 in a year into a Roth 401k that can then invest in private placements. So that's the part that this proposed law is going to attack, is the ability to do that conversion. They want to hold it as tax deferred money. What's stupid about this is it actually does not raise tax revenue, because the traditional 401k match is a tax deduction, thus lowering tax revenue. It's only when an investor converts it to the Roth that it creates more taxes, because the transaction is reported. So it goes to show you how asinine these politicians are. They're not even thinking through their legislation. So that's on the ropes, and we need your help to write your congressperson, or better yet, call them and tell them this is a bad idea. It's taking away Americans' ability to save for retirement. It's taking away Americans' ability to have investments that are not in the stock market. And specifically, it hurts small business, because these private placements, as they're called, is really just a way for me to invest in somebody else's small business, give them much needed necessary capital, and then I get the appreciation as that business grows. And so this is very negative effect legislation, if it passes, on small businesses. So I'm going to have links under this on how to get a hold of your congressperson, and what sections of the bill that you need to call or write, preferably call because it's more personable, and say this is a bad idea. It's hurting Main Street Americans. We're not the rich people you're under, that you're trying to attack. Now, switching gears from the 401k, the next thing is the self-directed IRAs and Roths. They're trying to take away anything where you need to be an accredited investor. So that means any private placements. It basically means that they're going to limit you to the stock market if you're wanting to buy into a company. And they're wanting to limit if you're a managing member. Now, I mentioned on our last video, we are advisors, we are entrepreneurs. We will figure out ways around these negative impacting laws if they pass. And there's workarounds. So it's not the end of the day there. We can figure this out. And so that's the long short of it. We still have ways to get you into precious metals. We still have ways to get you into cryptocurrencies where you'll never pay taxes on that inside of the qualified codes. I just talked to Adam, my tax attorney, and he's the one that sets up the custodial relationship. So hang on for Friday's call. We're going to give you a link that you can click and get directly in touch with Adam's organization through the Independence Money Show. And we encourage you to set up those Roths and 401ks if you're self-employed as quickly as you can and take advantage of these laws ahead of any potential changes. But again, we need your help. We need you to take action right now and call your Congress personnel and say that this section of law, the specific section of law, is a bad idea. It's going to hurt small business. It's going to hurt individual investors on their ability to take care of themselves. And maybe together we can make a difference, and maybe they'll listen. We'll see. So for now, that's today's show, and we're going to circle back to you with some more content. We're going to have Andy from Miles Franklin. We're a licensed dealer with Miles Franklin, so if you're interested in precious metals, let us know. We could help you assemble that portfolio. He's going to be on an interview on Wednesday, and then Adam, my tax attorney that I've used for decades, is going to be an interview on Friday. So we're going to be bringing out some great content on the Independence Money Show. Thanks for watching. Thanks for subscribing. And thanks for sharing and expanding this channel to others that it can help. Until then, see you next time.